Happy Friday, Brian Manning with the weekly update. Let's get right to it. Monday this week, there's a lot of talk about the Federal Reserve, the beginning of this week, and really all week long, and what they should do and should they cut rates. If we look at the Federal Reserve historically, they are always too slow to react. What do I mean by that? If we go back to during COVID, they have what's called quantitative easing. So it's when they were purchasing mortgage-backed securities in U.S. Treasuries. And if we look at what inflation was doing, they kept quantitative easing going for way too long before they actually got into their rate hike cycle. Now they're in a position where a lot of people would say we're already experiencing recessionary pressure, and perhaps the Federal Reserve is waiting too long to cut rates. We're going to have to wait and see. But general consensus in the marketplace right now is the Federal Reserve should act sooner versus later and should probably cut rates. So that really started Monday, a lot of talk there. Tuesday this week, we had Redfin. So Redfin came out and said that 13% of all contracts were falling through. So let's take a look at this. This really brings up questions in the marketplace of what's happening as far as real estate is concerned. And, unfortunately, I've said this in the past, the news is so negative. We have to be really careful with the information we digest because they will latch on to anything. So this is a chart that shows deals that fall through. Shows 13% of pending home sales fall through in the month of March. But if we look at this chart and we go back to 2017, in the COVID years for sure, there was definitely less transactions that fell through because the demand was so high. But if we go all the way back to 2017, on average, this is like 11, 12%. So it's a little bit higher right now. Yeah, but if we're at 13% and the average before COVID was 11 or 12%, okay, maybe it's about 2% higher than it would historically be, but a 2% increase is really not that bad. So again, you got to watch the media. Then they come out and they say, concessions are on the rise. Seller concessions are increasing. So we looked at seller concessions to figure out, well, what does that track as far as history is concerned? So yes, again, during the COVID years when the demand was just off the charts, at that point in time, absolutely concessions were really at an all-time low. But if we look at concessions outside of those couple of years, concessions are really on track, maybe only a tad bit higher from where they would normally be on a year-over-year basis. So again, you got to watch the media because there's a lot of negativity that swirls around there, and they will latch on to anything. Then Wednesday this week, we got new home sales. So new home sales were up 7.4%. So this is signed contracts for new construction properties. Also, we got inventory. So what's interesting about inventory we have to watch is I always think we look at actual inventory. So actual inventory are homes that are completed, new construction on the market, able to be sold. Actual inventory, new construction homes is only at 2 months right now. Yes, if we look at permits and starts and homes that are maybe somewhere in the process of getting built, the inventory is going to be larger. But if we look at actual homes that are available to be sold, that's at 2 months right now. Then we got existing home sales on Thursday. So existing home sales were down 5.9%. What we have to really take into account there is the fires that we had in the West. Unfortunately, existing home sales on the West Coast were significantly lower, and the West Coast is a rather significant portion of our economy. So when you have a traumatic experience like the fires we've had in the West, that's going to have an impact on existing home sales. And if we look at the details of the report, that has really been the driving factor there. Then we also got inventory. So inventory is up 20%. Here we go again in the media. I mean, they're just tearing this apart. Once again, we have to be careful of what we pay attention to. So let's take a look at existing home sales and what has this done historically. So this is a chart. Let's look at inventory and what it's done historically. So this is a chart of inventory that goes back 26 years. And every single year, if we go back 26 years, we always see a bump up in inventory. Now, if we look at the COVID years, yes, inventory was low then. But this is where we are right now. So if we look at our inventory compared to the last 26 years, are we higher now than we normally would be? Well, it's spring, so we're always going to have homes that are coming to market. Are we higher than we normally would be historically? Absolutely not. And again, the media will latch on to anything negative. They don't go into any explanation. They don't talk with you about what we're seeing. So yes, we have a natural spring bump up. Yes, we're higher than the last couple of years. But when you look at 26 years of inventory here and what happens every single year, I would say that we are not at historic levels of highs, and it's not definitely an area that I would be concerned about. We'll have to wait and see what happens. Of course, I could be wrong, but historically, 26-year chart, it kind of proves where we're going and where we have been in the past. Today, Friday, relatively quiet news day. Not a lot to talk about. really all eyes are going to move into next week. There's a ton of information coming out next week that's going to be impactful. GDP reports, employment reports. We're going to have to wait and see what happens next week. But for sure, next week is going to be very market moving. It's going to have an impact on rates as well. But we'll have to wait and see how it goes. I'm around all weekend. If you have any questions, let me know. I'm available 7 days a week, 8 a.m. to 8 p.m. Call me, text me, whatever works for you is good for me. Happy Friday. Hope you have a great day.